Alrighty, so today's review is going to be on Euro CAD Green Day for me. So we're going to break it down, and first I'm going to go over to my Discord chat and we're going to look at what I plugged this morning, look at the analysis that I said beforehand, and we're going to go from there, right? So if you guys want to join my free Discord chat, there's going to be a link to that in the video description. 100% free. There's no catch, nothing. You click it, you join, you're in, 100% free, right? All right, so Forex trading. This is the tab we're in. As you can see this morning, I posted Euro CAD bias is bullish. Okay, bias is bullish. Higher time frame, market structure bullish. Bouncing off of a higher time frame level of support right now, 4-hour bullish order block. Lower time frame confirmation during London this morning. You'll see I also have noted that low on the 15-minute, which is right here. This is what I'm referring to. I'm indicating that it will likely want to take those sell stops first before resuming higher to take out those buy stops. The buy stops I'm referring to are high day and previous day's highs. See these equal highs right here? Really clean level. And when we have a clean level like that, it doesn't like, many times, most of the times, it doesn't like being left like that for long. It's too clean. It's going to want to get swept. Okay. So where do we leave off? First, before resuming higher, take out those buy stops. That's what we want. We want a discount marketplace to buy. All right. So let's go to my trading view charts. As you can see, just beautiful price action on this thing. Super clean setup. So I'm going to remove all this and we're going to start from scratch. Okay. So let's look at this from the lens of, like, I just opened up my charts this morning. I found this ticker, or I found this pair, and what was going through my head? What was my process like for looking at this thing? Well, let's start on the daily chart. What do we have here on the daily chart? What is the market structure? What is the trend like on this daily time frame? Because just by having the higher time frame trend, because a lot of traders, they don't even do that. They don't even have the higher time frame trend in their favor. Now, you can trade successfully without having a higher time frame trend in your favor. Okay, you could just play the short-term price ranges, look for that next draw on liquidity. That's possible. You can do that. There's people that do it successfully, plenty. But it's easier. It's much easier if you have that higher time frame trend backing you. I promise you. Okay. So we have the daily chart. We have our higher time frame market structure backing us. Okay. If you watched my entire series playlist that I have on my YouTube channel, on this YouTube channel, on market structure, you'll know that this is operating within a bullish market structure. It's consistently putting in higher lows, consistently tagging these highs. And recently on this leg lower right here, I want you to follow my cursor. See this leg lower, this pullback. We pull back into a what? Into a daily discount within that price range. Boom. See, we pull below 50% equilibrium. So we have this draw on liquidity right here, which I think this is likely. I could be wrong, but more than likely, this is what's going to get taken next. Okay. This is where price is at. This is likely what's going to get taken. That's our draw on liquidity. That was not my PT. I'm already out of this play. I've taken profits. But this is still serving as a draw on liquidity. Okay. You can have a draw on liquidity and it not be your PT. That's just where it's drawn to right now, those buy stops. Okie dokie. So yeah, higher time frame, daily chart. We got that in our favor. Boom. Let's go to the 4-hour. All right. So now we had a 4-hour higher time frame level, because remember, when I'm talking about higher time frame levels, that's 4-hour and up. Okay. 4-hour, I do consider a higher time frame chart. This is a 4-hour bullish order block. Look at that. That is a bullish order block on the 4-hour chart. It is a high probability bullish order block. Okay. We also have the fair value gap right here. See that? See that fair value gap? Let's just go ahead and note it as well. 3 candles. We got that imbalance in there with that bullish order block. Boom. We taps into that imbalance. It efficiently delivers a portion of that price action. It tests our higher time frame level reaction, right? Which we'll go into here in a second on the lower time frame. But that is your bullish order block. Okay. Again, when we're talking about order blocks, I have videos on it. Just search my channel. Just search my channel for order block. I have videos on it. But think of it like where it originated at. So think about where the selling originated at. That's why I marked the body, because that's where the bulk of the volume is in the body. It originated right here. This is where that candle opened on the 4-hour, and this is where that selling originated at. Now remember, higher time frame trend is bullish. This thing is bullish, and smart money, big money, where do you think they want to get their positions at? They want to get their positions at the best prices possible. And the best place possible was where that down move originated at within a higher time frame uptrend. Okay. Really grasp what I just told you. This is where it originated at, that selling originated at. That's the best price. The best price. They don't want to be buying when it's ripping up like this, okay, in a premium marketplace. They want to buy when, like when nobody wants it, when Nobody wants it because it's just selling off. It's red, it's red, it's red. That's discounted prices. Okay, that order block is in a discount marketplace on the 4-hour chart. That's key as well. Inside an imbalance, that's key as well. And below 50% equilibrium, you see if we take this low to this high, see how we pull back below 50% equilibrium, discount marketplace. So we have all these things lining up. Higher time frame daily, good. Higher time frame 4-hour level, good. We have a fair value gap fair value gap on the 4-hour chart, good. Discount below 50% equilibrium, good. Let's go down to, we got on the 1 hour, I believe, as well, but let's go down to 15. It's a lot cleaner on the 15-minute chart, that imbalance. So 15-minute chart. Now we got our higher time frame level. What's next? Do we have our lower time frame confirmation? Because that's key as well. If we want to be safe with this play, if we want the easiest, best plays, we want that lower time frame confirmation, because price, it didn't have to respect this level. Okay, it did not have to respect that level. It could have sold off down into it, and just crushed it and kept selling off. That's possible. Okay, so we want to wait for a reaction. We want price to tell us. We want price to tell us what it wants to do, and it will. Many times it will. Okay, sometimes you're still going to be wrong, and how does price tell us what to do? Or how does price tell us what it wants to do? Well, by giving us that lower time frame confirmation. We've looked at our higher time frame charts already. We looked at our daily chart. We looked at our 4-hour chart, higher time frame charts. Now we're on a lower time frame chart, 15-minute, and we're looking for that confirmation. We're looking for that lower time frame shift in market structure, that lower time frame fair value gap confirmation, okay, after grabbing liquidity. So we can see right here, see that fair value gap right there? That is your confirmation right there. See that? There's your confirmation. So we traded down into that higher time frame level, which you can see displayed with a horizontal blue line, and then boom, you get a reaction. Shift in market structure, fair value gap, because we broke these highs right here. That's a shift in market structure with your fair value gap, a high probability shift in market structure. And also let me put in some day dividers as well before we resume. All right, so what happened this morning? Let's rewind a little bit. So this is midnight New York. Okay, now we traded higher, and we didn't trade higher. We traded lower, and we took a key liquidity pool. What is this move right here during London session? What is this move right here? What would we call that? That is a Judas swing. Okay, think power 3. This is that manipulation that's taking place. It looks like it's going to head lower. Okay, because this short-term market structure in here, this is where we had that shift on the 15-minute. Look at my cursor. We had that shift, and then that 15-minute lower time frame market structure was consistently trending lower, consistently trending lower, consistently trending lower. Coming into London session, consistently trending lower. There's your Judas swing, because remember, higher time frame trend is bullish. This is Judas swing right smack into our higher time frame level. Okay, so bears that are not privy to the higher time frame trend, that are not privy to SMC, to these higher time frame levels, what did they get caught in? Boom, big shift in market structure. They're taken out on that right there. They're taken out on it. Okay, because that was off of a higher time frame level. That was their Judas swing. That Judas swing came down into that level. It rebalanced that price action. It took Asian session lows, key liquidity pool, and then right after doing that, you get a shift in market structure, a fair value gap confirmation. Let me draw that on a little bit better right there. So fair value gap confirmation, broke high of day, very, very, very bullish. Okay, so now we consolidated for a bit up here, and we're coming into New York. Okay, and if you recall, what I said was I want to see it take out that 15-minute, those sell stops. And you might be thinking, okay, well, it's tapping into this fair value gap, Mike. Why not just go long? Why did you think it was going to take out these sell stops? Why do you think it was going to retrace deeper within that range? Because we have to consider, let's draw Fibonacci. Let's draw Fibonacci on here. Within that price range that was created this morning, that swing level was in what? It tapped into that fair value gap, sure, but it was above 50% equilibrium. That swing level was above 50% equilibrium. That's how I knew that this was going to be that stop run this morning, because it was in a premium marketplace. That's a keynote moment that you want to know, that you want to put down. This swing level was above 50% equilibrium. It was inside of a fair value gap as well. And price, typically it trades from discount to premium, premium to discount. So I figured it was going to want to trade down into a discount marketplace. It could have ripped. I want you to get that through your head. Anything can happen with trading. Anything can happen. But remember, we're playing probabilities. What's more likely? What's the probability? What's going to happen here? what happens more times than not? It's going to want to trade down to a discount. It's going to want to take those sell stops, okay? Because bulls also, they're going to get taken out of this play right here. Some bulls will, okay? The bulls that are privy to discounts, premiums, stop runs, all that good stuff, we know that this is a stop run because it's in a premium. What does price do? It comes lower, takes those stops, trades below 50% equilibrium. Discount, you're cheap. At that point, you trade below 50%, you're in a discount, you're cheap. Now, there's also something else key in here because this is where I got my entry, right above this 50 level because I wanted to account for the spread. That's why we're right above the 50 level, but 50 is your key institutional price level. As I've said so many times before, your major market reversal points, typically they'll happen around key institutional price levels. So like 0, 20, 50, 80, those are your key institutional price levels. So let's put all this together because again, think of price like it's a puzzle. We put this puzzle together. We're getting one piece here, one piece there, one piece there, and eventually it's going to make a very beautiful picture. So we had that bounce off the higher time frame level. We took liquidity, we traded into that imbalance, boom. Now coming into New York session, we have these sell stops here in a premium marketplace. Okay, I figured price wasn't going to turn there. One, like I just said, it's in a premium, but also that's what's that level? Is that a key price level? It's a very random price point. I mean, that's 1.4756, 56. That's a very random price point. I don't see that holding, and especially since it's in a premium marketplace. So likely what's going to happen is going to want to sweep those sell stops. That's a fake run, okay? So we called its bluff. That's a fake run. It comes lower, tags them, and then finds support ultimately around that 50 institutional price level, okay? In a discount marketplace, 50 institutional price level. This fair value gap at that point is just completely rebalanced. What was my stop on this? My stop on this was low of day. Now you could have put your stop right here. You might have got stopped out on that. Like it didn't tag that level, but I'd say spread probably would have got you if you kept your stop underneath that. It's like, yeah, definitely. I'm gonna say it definitely would have got you if you kept your stop right there underneath the fair value gap. I had my stop underneath this key liquidity run, okay, because that was too tight for me. That was too tight. So if you get your entry off that 50 level, how many pips is that? That's not even 10 pips. Now, that's not even 10 pips. And I've said this in past videos. I really don't like having my stop below 10 pips. That's like a cutoff point for me. I don't like that because then the spread will get you many times like it would here most likely. So that was too tight for me. That's why I didn't go underneath the fair value gap. Okay, so with that being said, where's your next key point? It's right here where that key liquidity run took place. Okay, so that was my stop underneath the low of day. My profit target, well, my original profit target was actually previous day's highs. See these really clean highs right here. I figured that was going to want to get swept, but we have to consider what was today high impact news, very high impact news at 8:30. So that's why I ended up bailing. That's why I ended up bailing with my 1-to-1. I still got a 1-to-1. So right before the news, I bailed out of this. I wasn't going to risk it. Okay, I would have been rewarded. I would have got my full PT if I held it, but it's not worth it. That high impact news, holding through high impact news, it just ain't. So I was up in the green, got my 1-to-1. I was done with it. So yeah, that was just a really clean play. I mean, picture perfect. Had about everything I wanted on it.